Hello, everyone, and welcome back to another weekly review for the Divergence University trades. My name is Jordan, and in this video, guys, if you're watching it for the first time, what we're doing is basically going over the previous weeks and some of the potential setups that emerged on the market. We're uploading these trade examples to this table, which you can find at the divergenceuniversity.com. And basically going over these examples, trying to figure out what could be done, how it could be done, how it should be done according to our trading methods and so on and so forth. So pretty much if you're using any of these softwares or courses, you have a pretty good idea what we are searching in the market on weekly basis. And basically this is what these videos are about. Last week started from the 15th up to the 19th, which leaves us with 4 trades more or less, sorry. Let's start from the beginning, but first of all, firing up the pen. And all right. So Euro Yen, this one is breaking above the critical level, and more or less this is the zone I was following during the week. Right here we have divergence, which started, so first false break on the lower time frames, 15-minute or so. I'm pretty sure this is a convergence here. Then we have multiple divergences on these highs, and pretty much the price is trying to push up, but the way it looks, the way it seems, it requires here some pullback in order to gain the momentum from the bullish side if it's going to be continuing. Why am I talking about bullish continuation? Because as I mentioned, for me, that was the level that had to be broken, this specifically, but in general, the zone, right? So until this one holds, I can see something like that happening, which kind of fits with the idea of this thing going and pushing lower, because here we had multi-time frame divergences. So as I said, first false break. Now, whether you're going to consider this as a second false break or not, it's up to you. But for me personally, this is second false break. Then we have, during the weekly gap, push down, push up, and we can see that the price is basically struggling to continue to the upside, right? So again, those are the divergences. Then we have the big bearish candle, which is suggesting a possible push lower might be expected. And we did get that push lower after this consolidation of a few hours. This is approximately where the target was, sorry, right here. And it was missed just by a few pips, unfortunately in this case, but that's because of the risk reward ratio, right? If you're looking for a one-to-one risk reward ratio, then things are completely different. If you're looking for some kind of exit strategies, then again, your trade management would be completely different. So again, this is just an example. Don't take it as the only way to be traded or anything, but try to get as much as possible from this analysis and then apply them into your own trading analysis, because that's the only way, right? I mean, we might be doing these videos for 2, 3 more years, 1 month, 10 years, who knows, right? But the idea here is to teach you how to analyze the market on your own, because once you start trading on your own, which is the ultimate goal here, you should be able to do it uh, basically without any other opinions going and, you know, in between your own analysis. So next on the list we have Aussie dollar. Now this one, if you're part of the Traders Academy Club, you probably know my view, and my view here would be a bit different. Pretty much going to look at it, and I did look at it like this, which was a bullish setup. On the other hand, what personally looks at this thing as two waves, and then you have pullbacks, right? Divergence against, and then divergence with. So first of all, you have divergence on the histogram right here, which is not ending divergence. And then we have hidden divergence, which is supportive. So this divergence tells you, okay, most likely we're going to get pullbacks or reversals here, bullish moves basically. And then this divergence is telling you we should be looking at pushes to the downside, right? That's pretty much the idea behind this example right here. Pound yen, not my favorite on the list, to be honest, but basically here we have the higher time frame divergences, right, which is the 4-hour chart. This is also 1-hour chart divergence on the histogram. In other words, you are looking at the big false break, and in between here, I really don't know how to count this thing, all right? I'm pretty sure this wave was the smallest of these 3 waves. Might be wrong, I'm not going to check it now, but that's not that important, all right? As we said, the most important and critical part here is the false break based on this one and the false break based on this high right here, okay? So divergence sticks, and we got the huge bearish candle. Now, if you don't agree on the risk reward ratio in this case, you can check for levels, and the levels in this case would be right here, approximately. So that gives you not that much when you look at it like this on the chart, okay? This is approximately the level where you might be looking for pullbacks. But when you think about it in terms of pips, that's 50% increase, which means if you wait for this pullback, risking to miss the trade, of course, right? It's always a trade-off. If you wait for the pullback, you might miss it. But again, just in the general idea here, if you're going to look for the pullback and you get triggered, then the 1 to 2 risk reward ratio would mean something like this, right? So actually, no, it's even higher. So this is 1, and this is kind of 2, something like this, approximately this zone, compared to this zone as a target. So then you're going to require from the market to push to this level rather than pushing to that level, okay? As I said, there is always a trade-off. If the price starts pushing lower immediately, because this is indeed the end of a cycle or whatever you're checking there, you might be missing it. But as I said in the beginning of the video, take this information, think about it. Most importantly, go back, test it, back test it, paper test it, meaning trade these things on a demo account, okay? Not on a live account. Trade them on a demo account. See what works for you, what doesn't work for you. Do that for at least 100 trades. If you're trading 1 hour, 4-hour chart, do that for at least a few months. Get 100 plus trades, and then do the statistics, okay? The numbers don't lie. So see what works for you, where you feel comfortable, and start trading this specific idea, okay? Dollar cut, well, this one is actually pretty clear, at least in my opinion, it's pretty clear. This is where we started with the divergences. Then we got the false convergence, another divergence here on the lower time frames, which could be seen on 15-minute probably. But the focus is on the breakout. So basically, the big divergence on the 4-hour chart and the false convergence on H1, both of them providing this amazing push up, which is kind of creating convergence here, right? That being said, we can start looking for potential pushes to the upside, which is, in this case, could be seen as 3 waves or not. I don't know. Waves are really subjective, so I'm not going to argue on this argument. But then you have a pretty clear ABC, which is a corrective pattern. Then you have this zone, which is the critical level that was broken, this entire thing. And we went ahead and broke it in one straight push up, right? This one. And again, as I said, this is where you got the ABC, no trend line breakout because this is the divergence, but from that point, we're finding here hidden divergence. The price is pushing with this beautiful candle to the upside. And in my opinion, this is probably the best example that we could be looking at in terms of the forex pairs from the previous week, because pretty much everything comes in play, right? You have multiple confirmations, you have amazing levels which are being broken. MACD confirms push to the upside. Structure, at least the pullback structure, is kind of clear. Price is bouncing from the very bottom of this level. Why the very bottom is important? Because when you have a level, and let's say this is our zone, and we're breaking above it, so now you're looking for pullbacks to buy. If the price does this, and here you start looking for the buys, you're still exposed inside this zone, because now if this is your entire zone, now the price might go ahead and test the bottom, right? This is the support. This entire thing is the support. So nothing is stopping the price from going and testing, even creating some kind of false break, clearing stops, because trust me guys, there are super high quality, not quality, quantity of stop orders right here. 99% sure about that. If this is your level, many people are going to protect their buys right below it, right? This is the logical place to protect it. So sometimes you will see these spikes, but the main point here was we want to see the price clearing the extreme zone. In our case, if you are looking for buys, the extreme zone is at the bottom. So the price clearing this, actually not, the entire box is this one, right? The entire box is not covered because that would require the price to go there. But the most dense zone, being most of the candles, which means most likely this is where most of the volume is right here, and those are the extremes. So we are covering the extreme zone of that condensed zone right here. And this is a good thing. At least I consider it a good test of level, because if it would be stopping right here and then starting to push up, and then you have breakouts or whatever it is your trigger, right? It doesn't have to be divergence. Then you have exposure to this zone to be tested. This is what I'm trying to say. All right, so that's those are all the examples that we found interesting from the previous week. If you have any other ideas or any other setup, whatever it is, leave us a comment below or find us in the Telegram group, and we're going to check it out together, discuss it, and give you some comments. Thank you for watching, and I'll see you in the next video. Have a good week.